Hello and welcome to Asking for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. It was a strong start to the trading week on Monday. The S&P 500 and the NASDAQ both hitting record highs. All those positive moves on earnings, optimism, and at the end of the session, the S&P and the NASDAQ ended the day trading day up. The Dow ended the day in the red. And will a foldable Apple iPhone help turn the page for Apple's business? The tech giant may have the gadget out next year. We're taking a deep dive into what it may mean for the stock and consumers. And we'll know more this week on how well big tech is performing in the face of tariffs and policy uncertainty. We're exploring the best ways to pivot your portfolio. Well, Apple has its sights set on biting into the foldable phone market. Last week, an Apple analyst from TF International Securities reported the tech giant has plans to make a folding iPhone next year. Here to discuss is Ramon Lamas, research director with IDC's Devices and Displays team. Ramon, it's good to see you. So let's talk Apple and this foldable phone, Ramon, because Bloomberg did note, by the way, it's on the way. It's coming next year. Now, they do note here, Ramon, I'm interested to get your take here. They say Apple's first foldable phone, they say it's not going to break any technological barriers. It's not going to redefine the category. But they say here that may not matter because Apple's unmatched ability to market premium hardware to consumers could make it the dominant player in the foldable market within just months of launch. Do you agree with that call, Ramon?
I agree, but to an extent. Okay, I'm not going to be going, entirely into saying that it's going to be, the device is going to change the entire market or for Apple. What I will say is this, that Apple has a lot of demand out there for its products, and foldables is one of those last, let's say, unicorn type devices that Apple has yet to introduce, but we know that people want it. I mean, in a recent survey, we asked folks, hey, what's the interest for a foldable iPhone? About 21%, yeah. I said, I want to get it. Now, a third said, no thanks. And in between, 40% said, I have to wait and see. I got to see the price and I got to see the features. So when you put that all together, for a product that is, matured a little bit, it's not exactly new. We have a lot of people to thank for that, folks like Samsung and Huawei and a number of other Chinese vendors. But, one of the things that Apple has done very well and continues to do well is it stands on the shoulders of the giants that came before it, that pioneered a market, pioneered a new area. And Apple will stand on the shoulders of those giants and say, here, we have a great product and we think we can do just as good, if not better. And next thing you know, they're going to capture a lot of market share.
In broad strokes, Ramon, what is so special about a foldable phone? What is unique about that form factor? What are the advantages of it?
I think the first thing that kind of jumps out at me is that, here, you have a big screen. And in some cases, some of the foldables out there, you can get about a 10, almost like an 11-inch diagonal screen on par with, some of the tablets that you see out there. So if you're one of those consumers out there that says, I have a smartphone, I have a tablet, boom, I can put it together in one and just carry one device around with me, that's terrific. And that's certainly a big draw. And you think about all the multitasking that you can do with that, all the different apps and windows and widgets and, be super productive on that all at the same time. But, second to that, and this is kind of surprising to me, is that, in the foldable form factor, guess what? The phone actually becomes smaller than your average, let's call it slab or bar style phone. It's a lot easier to pocket. It's more, pocketable, more portable, a lot easier to handle. And in that closed, form factor, the screen is protected. It's not going to get scratched. It's not going to get dented. It's not going to get wrinkled or anything like that. But it's going to be in a position that, it'll be, preserved and ready to go use the next time you choose to open it up. So between the display and, the overall form factor, I think that's what's going to, appeal to a lot of consumers out there.
And who are the big players in this market right now, Ramon? You mentioned Samsung. Who are the others?
Yeah, Samsung, we got to tip our caps to Samsung. They're one of the vendors that really kind of just pioneered this market and said, hey, we can come out with a device that people are going to love and you're going to be able to see so much. You can see your videos, you can play your video games and consume so much more multimedia. And they did a great job with that. But very quickly they were not alone, and this is where we see the march of a number of other Chinese vendors get in here. I mean, Huawei out of China quickly stepped into that number one spot to kick off 2025, and actually finished the first quarter ahead of Samsung. Then you have other companies that you have like Xiaomi, you have Oppo, and you have Vivo, and you have some of the up and comers. You have Motorola owned by Lenovo, which came out swinging with a more affordable foldable device. And then you have some other vendors kind of jumping on board, saying, we can come up with a device, and it's going to be a little bit smaller, it's going to be less expensive, and we're going to help expand this market, not just in terms of the number of devices, but also the different kind of price points, because these are not inexpensive devices, and there's a lot of folks at the other end of that price point spectrum that really want to get in.
In terms, Ramon, of where the foldables are popular, I had read, Ramon, that, just thinking geographically, that Chinese consumers really love the form factor. Is that true? Does the data support that?
Absolutely. And again, a lot of that is due to, those vendors that I talked about, those China-based vendors that already have, a position in the Chinese market. So it's easier for them to say, oh, we already have the distribution channels, we already have those partnerships. We can get a lot of volume, quickly out the door. But once we get that part aside, it's that experience that you have with a foldable that you can, enjoy your multimedia. You can enjoy your movies, your videos, your social media. You can have multiple social media, apps going on at the same time on just that one screen. And that's really kind of appealed to a number of users out there. But behind China, you have places like North America, you have places like Western Europe. And because, again, these are not inexpensive devices, and this is only going to appeal to, a certain segment of the market who is, number one, going to want that kind of device, and number two, who's going to be able to afford it.
Let's talk about affordability. I'm just curious. And I am asking you to speculate, I guess, on this one, Ramon, but I want your forecast. I want your estimate here. Apple introduces a foldable. What do you think Apple could get away with charging for a foldable, Ramon? I mean, would you say ballpark, is it $1,500? Is it $2,000? Is it above that?
I think between 1,500 and 2,000 is a reasonable place to start. And here's why. When you get to some of the premium and ultra premium iPhones out there, you're already kind of touching into that stratosphere of about $1,500, $1,600. And you can work your way up from there depending on the memory size. The thing is, and Apple probably won't do this, they don't want to have overlapping prices for different devices. You don't want to confuse Joe and Jane consumer on Main Street by saying, hey, you know what, you could just pay a little bit less or a little bit more, and you really have to struggle with trying to figure out which more how much you want to pay, and do you want to pay that difference. What Apple does well is that there's a very clear delineation of where one pricing tier stops and another one begins. Between 1,500 and 2,000, I think 1,800 is a little bit more reasonable by my taste, because I think that automatically prices you out of some of those ultra premium iPhones that are out there, the iPhone Pro Maxes, for instance, with terrifically huge storage space on board. So you have to avoid that price point, those price points, and build up from there.
Ramon, great to see you. Great to have you on the show. Thank you.
Thank you, Josh.
Stick around. Much more Ask for a Trend. That's still to come. The S&P 500 and the NASDAQ notching fresh records, with big tech set to take earnings spotlight. Joining us now with the trading day takeaways is Yahoo Finance's Jared Blickery. Jared.
Josh, you remember the Mag 7?
Yes.
All right, approaching. If you were to index all of them, equal weighted, yes, near a record right now. You can read the fine print. And I'm going to show you the Mag 7 heat map here. And so NVIDIA and Microsoft have been hitting record highs recently. This is today's price action. Let me just throw on what has happened since that April 8th bottom. And I have a little bit more than the Mag 7 here. I also have Berkshire Hathaway and Eli Lilly. Berkshire not doing too well since Warren Buffett announced his retirement, but that's a separate story. So as I said, NVIDIA up 18% since those April 8th lows. Microsoft up 6.2%. Bunch of record highs since then. If I throw in the equal weight, I can show you MAGs. Here we go. MAGS as a proxy for the Mag 7 ETF. And I'm going to have to put a one-year chart on to show you that the record highs are back here here in December. And what a story here that we haven't even talked about Mag 7 dominance in a while because it just hasn't been that big of a story. And of course, the stocks are bifurcated. Tesla's only up 2%. Meta hasn't gained that much ground, but Alphabet had a huge day. So did Meta. And just interesting to note what's been working in the market recently. One more small point on this. The small stuff today did not work that well. Small caps underperformed. Also, I've been looking at meme stocks. Those have been outperforming recently, but not today. So interesting outlier day.
Dollar making moves. What do we make of that?
Yes, not only the dollar, but also rates. And they have been going to the downside. So let me show you a US dollar chart. And by the way, when they go in opposite directions, that's actually not the greatest thing because we saw that around Liberation Day. And that was when the whole world was selling US dollars and then also selling bonds. But here's a 2-month chart of the US dollar index. I'll change that to a year to date. You can still see it's underwater by about 10.5%. And these lows here are multi-year lows. So that's pretty significant. There's huge positioning to the downside in the dollar. So that means you could get a short covering rally. But I think the weight of the evidence is pointing to more down. Also, I just taped an episode with Dimitri Kofinas of the Hidden Forces podcast today for Stocks in Translation. He had something to say about the US dollar being decentralized. Let's take a listen.
The dollar is the most decentralized currency on the planet.
Because we got cash, and a lot of people use that cash.
We have cash, a lot of people do cash, and also lots of third parties that exist outside the Federal Reserve banking system issue dollars. Lots of people contract in dollars. And this is all a source of dollar demand. And so when a foreign bank that's not under the jurisdiction of the Federal Reserve issues a dollar-based loan, what it's doing is it's issuing what we know as euro dollars. And what are stable coins? They're euro dollars. So what we're really seeing is the expansion of the euro dollar market.
We got into a lot of interesting stuff there. So US dollar, most decentralized currency in the world, maybe open question mark, but also euro dollars painting the picture, kind of the predecessor of stable coins. We map it out. So catch that episode tomorrow, Tuesday, July 22nd.
It's a Monday. Let's talk crypto.
You bet. And let us do that. Ether is nearing $4,000. Ether being the cryptocurrency and got another nice pop today. It has not cleared resistance. This is since June 8th. Well, this is since some bottom. Let's take a look at today's price action, up 25 basis points or so. Let's take a look at the 1 year. Yes, right up against these highs, but this is not the first time we've seen those highs. Let's put a 6-year chart on this, and you can see we're just at the upper end of this multi-year range. So you break out from here. I said it last week, probably an easy bet that we can at least test those 4,500 all-time highs from, what is that, late 2021. But Ethereum has really been taking over a lot of market share from Solana, definitely been reflecting in the price here. And I think I mentioned this last week, but Ripple, against all odds, Ripple making all-time highs here. I thought I counted it out as down in 2020, but it has bounced back as well.
What else is on your radar in that sort of alt finance space?
Polymarket is re-entering the U.S. and I was just using their betting futures on Trump firing Powell last week. So they also do sports betting. They just bought a very small exchange, not very well known, but that's going to give them a foothold into back into the United States. And it looks like this is after some troubles they had with the Department of Justice. But that's in the rearview mirror. Guess what? Brand new administration, new attitude towards a lot of these things, and that's what's going on.
New day. Thank you, Jared. Appreciate it. Stick around. Much more Ask for a Trend still to come. Alphabet and Tesla are the first names in the Magnificent Seven set to report earnings this week. And earlier today, Julie Hyman caught up with some experts of the industry to discuss how investors should be positioned ahead of those earnings.
If you're a money manager and you're trying to do right by your clients and yourself in terms of performance, you want to try to double your money on these kind of investments as rapidly as you can. I think 5 to 7 years is a appropriate benchmark to do that in. And I think it's really hard to look at any of these companies except for Google and say you're going to do that in that time frame. They're very, very expensive. It's hard to see them getting doubly that expensive in a short period of time. So I think that the risks are kind of against you at this point. You've got to be kind of circumspect in terms of when you want to buy into these companies. They're great companies, but great companies are not always great stocks. And you look at the Nifty 50 back in the 70s, and you look at all the tech stocks before the tech bubble popped in 2000, and you think, maybe we ought to just watch for a while, because they got to beat really, really big for them to keep going up extensively.
George, you mentioned that Google or Alphabet would be the exception here. Why?
it's just so cheap. Everybody's so down on all the antitrust actions against Google, and they're really down on the stock, and they've driven it way down from a multiple standpoint. I think the odds are in your favor with Google. I think it's just such a great company. It's got so much going for it, and if it eventually gets broken up, the parts are worth a whole lot more than the aggregate right now that in one stock. So I don't think it'll get broken up. I think it'll stay together, but I still think the odds are in your favor with Google. The rest of the stocks, especially Apple and Tesla, I just don't think you've got the odds are in your favor right now.
Olivier, I want to get your take on Alphabet and how you think it is positioned here from a fundamental standpoint versus some of its competitors.
Hi, Julie. I think George is right on a lot of the things that he says. I agree pretty much with everything that was just said. I would just add that Google has a really, really strong position in AI. And I know that in previous segments, and just as kind of like a general discussion, OpenAI has been sort of, eating into the market share of Google's kind of like AI business. But Gemini is super strong. It has super strong integration into all of its products. And I feel like ultimately all of this is just an ROI discussion, right? Which companies can cut costs the most and which companies can generate the most revenue, the most profitability. Google is still sort of like in the building phase with Gemini, and it's outpacing a lot of its competitors. I wouldn't say that it's ahead of OpenAI necessarily, but I think that basically when we're talking about agentic AI, we're talking for consumers especially, and search. We're talking about OpenAI and Google, and then in the enterprise, we're getting into AWS and Azure. But Google has a really strong position there, and I'm just generally impressed with how good Gemini is, how well integrated it is in every single product, whether it's hardware, software, search. It's just a revenue machine, just waiting to sort of find its paces in terms of how they're going to generate that revenue, but it's scaling.
Well, and Olivier, something else that's interesting when you talk about the ROI and the cutting cost side of the equation, something else that is bubbling up more and more is the cost savings that AI is presumably going to afford not just these companies, but maybe all companies. And I don't know if, besides Meta sort of throwing millions of dollars at individual executives to come over, are we going to see sort of a wholesale cost savings across the board once AI starts to take hold a little more firmly?
Yes and no. There's a cost shifting for sure. I don't know that there's necessarily a cost savings because on the one hand, training these large AI models is extremely expensive. Investing in the infrastructure that supports that training, and then later on inference is also really expensive. So you're seeing all of the spending in data centers and chips, which is obviously really good for NVIDIA and AMD and TSMC and all the chip companies in that ecosystem. But right now it's still cost shifting. There's also a lot of energy concerns, the energy consumption of training AI. But the one sort of hopeful thing that I have, and that we'll probably see towards the end of this year, beginning of next year, is I think we're going to achieve parity between AI training and AI inference. And inference is kind of like the workloads of you asking AI to do something and it just does it for you. The training is a lot more power intensive than the inference. And so I think that as we transition from a primarily training phase of this AI revolution to an inference phase, we're going to see the market shift. And when the inference really kicks in, that's when you should start seeing a lot of the applications that allow people to be more productive. And those productivity gains should sort of overpower or compensate the initial costs of getting that going. So we'll see that shift start to move towards the end of this year, beginning of next year.
Let's take a look at what's trending after hours here. Shares of NXP Semiconductors, Zions Bancorp, and Steel Dynamics in focus. We're going to start with NXP Semiconductors' top in earnings and revenue estimates for the second quarter. While looking ahead, the company says its guidance for the third quarter reflects the combination of an emerging cyclical improvement in its core end markets, as well as the performance of its company-specific growth drivers. Shares of Zions Bancorp, those are moving higher. The regional bank reporting earnings results for the second quarter. Adjusted net interest income coming in at $661 million in Q2. That number beating the street's estimates, but total deposits did miss expectations in the second quarter. The CEO of Zions saying, quote, "We're very pleased with the quarter's strong financial results, with earnings per share up 27% over the prior year period. And Steel Dynamics reporting a miss on earnings estimates for the second quarter. Adjusted EBITDA also falling short of Wall Street's expectations. Company noting the uncertainty regarding trade policy continues to cause hesitancy in customer order patterns across its businesses. Company adding that the hesitancy combined with an inventory overhang of coated flat rolled steel resulted in lower steel and steel fabrication shipments in the second quarter. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wealth. Have a great night.